All right, let's give you that markets update now. And both the JSE and the Rand will be hoping for a more positive trade today. Local markets closing in the red yesterday, led by losses in real estate and retail sector stocks. Head of Equity Research at FNB Wealth and Investments is Chantal Marx, who joins us now for a quick sense of how the markets are shaping up at the JSE. Chantal, good morning to you and thank you for your time. So let's start with that overall sense of how the local index is faring, and let's include the currency. How's it doing?
Yeah, well, unfortunately, it seems as if we are up for another difficult day today. I mean, there isn't much direction. We aren't seeing major sharp moves across the indices, but there's just a general sense of trepidation across global markets currently. Quite a bit of data coming out later this week, and a lot of Fed and ECB speak as well. So those are the monetary policy authorities in Europe and the US. So there's a sense of nervousness out there, and that's reflected in the JSE this morning, trading slightly lower, as well as a slightly weaker rand.
Let's quickly launch into company news. Nampak's trading statement for the year, which ended on 30 September 2023 for this company. What stood out for you from their numbers?
Well, it's very difficult to read their numbers in the form of a trading statement because you don't have all the detail on hand. They have substantially less shares in issue because they underwent a major share consolidation just before they raised money via a rights offer. And there's also lots of one-off impacts there. The market didn't like it though. The share opened lower on the day. But I think that with Nampak, you also have a kitchen sink scenario where this is probably going to be the worst period of reporting for them.
Let's move on to Stefanuti Stocks, publishing its results for the 6 months, which ended 31 August 2023. How have they fared in the period under review?
Well, yeah, the underlying performance was actually pretty decent. We saw good revenue growth, operating profit growth as well. But this company has a very big debt burden that it's carrying currently, and several contract claims against Eskom, and mainly focused on the Kusile project outstanding. Now, because of that arbitration taking so long, and the sheer size of the money that will perhaps be awarded to Stefanuti, they've been unable to reduce their debt. And now it seems like they're in a situation where they're unsure if they will be able to continue as a going concern, which I think is quite a scary thought for the company and its investors.
Let's conclude with Tsogosan, the hotel and entertainment company, announcing that its income rose to 5.86 billion rand. Help us make sense of that performance.
For Tsogosan, the result was actually pretty solid. We saw good revenue growth, as you mentioned, and it really was broad-based from the casinos to food and beverage as well as entertainment as well. We did see some strain on profitability, though, and that is mainly because of higher inflation, the impact of load shedding and diesel expenditure that it has to occur in order to keep the lights on, and a host of other issues. None of this was insurmountable, though, and I think that when you look at the company's outlook statements, it was actually pretty positive. So I think that's a decent set of results from Tsogosan, now showing a more normalized kind of framework after a very strong recovery after COVID-19 that we saw play out last year.
Chantal Marx, let me thank you very much for that markets update. She is head of equity research at FNB Wealth and Investments.